Say what? All right, let's do it again. One more time. USD, ticker ProShares, Ultra Semiconductors on Amex. And look at the monthly chart. Before we head on to stage analysis on the weekly, I always want to make sure that I know what my monthly chart's telling me. Gonna avoid me whipsaws on the smaller time frames. What do we have? I just identified monthly defined resistance, monthly defined support. All those wicks is noise. Not a lot of noise, not a lot of noise, noise. So that means lots of volatility, waking up the sellers, the bears. Sellers coming in, buyers coming in. Big fight here. Sellers trying to bring it all the way down to 12-month moving average, bring it back up. Buyers trying to bring it out. And then the lines are starting to be drawn, guys. The chart morphs. Now you get a clear picture of what people are willing to buy for it, what they're willing to sell. And if it breaks down below those levels, those monthly defined breakdown levels, then you know that you're going to have a vacuum until you hit that next support. So now I have a breakdown level around 40. Monthly close below 40 brings me a target 30, 30, 30. And what I like about that, it brings me to previous area called a wall. Previous resistance turns support. It's going to have a lot of buyers right here. So I like the symmetry. Now it's just, if we close below, we have to really wait for the October close. If we close below that, then we're probably going to hit that right here. Could go down here, maybe bounce back up, maybe get close to that 12-month moving average, try to retest that previous support turn resistance right here back at the 40 level, and maybe continue down. So I'm always trying to imagine what it could look like, and so when the price action unfolds, I know what is healthy for me, what that it's normal behavior. If it's acting different way, I need to reassess and see if I still have the weight of evidence in supporting my thesis that this is a stage 4, that's continuation to go down. It's always you're always imagining. The more you imagine, probably like any professional sports players, they practice, they imagine, and then they practice what they're trying to imagine, or what they imagine, and when it rolls out in real life, in the actual situation, game time, then their brain's already conditioned, the synapses have been formed. They say, oh, okay, that's what's happening. So pull back on low volume. I'm not going to stress out. It's going to go. It's going to hit my resistance. It's going to pull back down. It's going to, and you get to build on that instead of succumbing to fear, succumbing to greed. But to do that, you need to practice. You need to look at the chart. You need to observe. You need to identify behaviors. And when you have all those that add up together, then you have a weight of evidence. This really helps you, this Mansfield relative strength. One of the main reasons I'm on the trading view. To do Stan Weinstein stage analysis, you need to be able to compare the performance of the stock against an index or the index it's in. I compare it to the SPX. It's a great baseline. If you can't beat the SPX, might as well just buy an ETF tracking it and letting that ride in the sunset and do something else. So always trying to beat the SPX. This had a nice base right here. Higher lows, contracting volatility. See, 17 all the way down to 10, up to 15, down to 10, 14, 12, and after that it explodes. You want that build-up to happen over time. That contracting, coil, and then bam, explode. Go up, baby steps, ninja, never challenging the 30-week moving average. That's a beautiful stage 2 you could have ridden for a few years, a couple of years. Oh, starting to get far away from the 30-week moving average. That's a big warning sign. So that's when you start looking for signs to sell into strength, or do it the defense way, wait for that pullback. When it goes back up, sell stop below. Higher lows, you're still good. Oh, lower lows. This would have been triggered here. if you didn't wait for the weekly close. But these are warning signs. They shouldn't be happening. Even these wicks here, they're always higher highs, higher lows. They're not going below that. So that's just a warning sign. The earlier you get out, you just save time. You move that risk somewhere else. You'll never catch the top with a stage analysis, Stan Weinstein. You'll never catch the bottom. You have to let the price action dictate when you enter and when you exit. And here you had some more signs. 2 months later, you had another sign. You had to get out, close below 30-week average. So save all that time for a few percentage points. It's worth it. Put that risk somewhere else. You're going to put it where? You're going to put another stock that's exploding right here. That's going to give you better returns for the time you're in. It's USD. Semiconductors treated you well up to here, but if it's telling you it's time to exit, it's time to exit, especially with this increasing volatility. 45, see it at 38, but now it's 48 to 38, or if you calculate the low, 36, and then you see volatile. That's not what you want. Volatility is trying to shrink right here. Tighter, tighter, tighter. So now we're ready for next move. It could have easily exploded to the top. It didn't. Or maybe it tried right here. It failed, came back in. We probably didn't have a signal here on the monthly candle chart to enter. Could probably check it. Right here, you see. Could have probably entered here, but we didn't have the volume. We didn't have twice average volume of the previous 4 weeks, so that means there's not that much buying pressure to go up. You're just starting to overperform the SPX. So right here, you didn't have the volume, so it's not a stage 2 continuation breakout. If we go on the monthly, you're not above the monthly defined resistance. Really important to go above that. You're not making higher highs, so that would have been a false breakout. If you would have just taken that clue to get in, that break above the horizontal breakout line, you need more than that. You need the weight of evidence, more clues that it's a continuation breakout. Woo! Down. 30-week average trying to go downwards. The longer the price action below 30-week average, the more it's going to start angling downwards. And here we are today, guys. 40 is the level on the monthly defined breakdown level. Weekly, we have 42 right here for this consolidation pattern. And then we have maybe this a little more resistance, more support here at the 39 level. Underperforming the SPX, increasing crescendo red volume. Below the Ichimoku cloud. All these things I'm telling you, they're adding their clues in the total weight of evidence. We have the monthly breaking down. Below Ichimoku cloud, declining 30-week moving average. Underperforming the SPX, guys. Increasing volume. These are all signs of a stage 4. Where do you enter? Do you enter here? Well, the month is not over yet. So what could easily happen here, you're pretty far from a sell stop here, maybe a sell stop here. What could easily happen is could have maybe next week a test of this, maybe this resistance here, this support turn resistance, and if that doesn't hold, then it could easily just ram through that. More tests of this support makes it a stronger resistance. 30-week average is probably going to be angling downwards at this level. Right here would probably be a good entry. Put your sell stop above. You have that horizontal support line, resistance line now that's going to protect you. The price action should not go back up on top. If it does, you shouldn't be in the stock. Higher lows, higher lows, higher lows. And this is probably going to be higher low also. If it becomes a higher high up here, you should be out also. That's how I imagine it happening, guys. So let's wait. There's a few more candles for the end of October. If it closes below this, ultimately the 39, the weekly defined breakdown level, if it closes below the monthly at the 40 level, stage 4 breakdown. All right. Patience, guys. Patience. Wait for it. You'll get a chance to enter.